What we're not seeing, and again, it's fluid, so I'm watching this closely, but what we're not seeing is any indication of a broad-based, within the United States, a broad-based consumer confidence-driven pullback in spending. I was talking to companies like Dick's Sporting Goods reported results yesterday. They commented on their report. They have not seen any indications. We had Urban Outfitters this morning talk about sales weakness in Seattle, but really nowhere else. So again, it's if there's any weakness in spending right now within the United States, it's been very, very isolated. We're not seeing any type of broader pullback in spending.
Yeah, and it's comforting in the sense that this doesn't feel so much like a business cycle, the end of a business cycle event, but it still is taking a toll, and it's building on itself. So, a couple weeks, a month ago, people were kind of watching to see, how they should react. And today, people are going, you know what, they should just close school for the rest of the year. I'll keep my kid home. We'll do it remotely. I mean, that's just not a conducive environment for these retailers for months, right? So what do you do with the stocks? I mean, that makes it very difficult, because if it is a passing event, that's one thing. But if these companies run into some cash flow issues in the meantime, it could push them to the brink.
Yeah, well, I'll say a couple things. With one, I think, a positive. Again, we're trying to find positives here because it's obviously, it's a critical and ongoing situation. But, one positive, too, is the consumer is really coming at this or entering this from a position of decided strength. Okay, the consumer spending by any measure within the United States over the past, several quarters now has been very solid. We've seen the recent jobs reports from the government, again, very solid. So the consumer, again, heading into this crisis is coming from a position of strength. Now, what I've been telling our clients, is, again, we try to look for, areas of opportunity here. One theme I continue to hit on is interest rates have declined significantly. Okay, we've seen this huge decline in interest rates. To me, that is a big positive for names that are in the home sector, like Home Depot, Lowe's, to a lesser extent, Williams-Sonoma.
Sure.
There's other names, like a Nike, a Lululemon, benefiting from very, very strong demand growth. Stocks have been hit hard. Again, as we rebound, I think those are the names that rebound the fastest.
And it was just the other day that Dick's Sporting Goods came out and had 5% U.S. comps.
But these high-quality businesses, and I'm going to mention again, Home Depot, Lowe's, Home Depot and Lowe's in the home improvement space, Nike and Lululemon in the athleisure space. Again, you might not get the bottom, but to me, those are high-quality names that are on sale right now. And my view, and take it for what it's worth, because I'm not an expert at all in viruses, but I'm optimistic that while this is bad and getting worse, probably it will pass. And hopefully in the not too distant future, we'll be looking back and saying this was an opportunity.
All right, Brian, thanks for joining me today.